Hey everybody, it's Pete. Good morning. Thank you so much for joining me today. It is Thursday morning, May 20th, 2021. Well, the market turned around yesterday in exactly the way that we could have possibly hoped, on a big gap down, kind of a big flush. The crypto markets have been pushing down. So the question of the day was, should we be buying stocks yesterday to start new swing trades, or should we be kind of letting the dust settle? Great that we had a reversal, a lot of, excuse me, a lot of key reversals where they opened lower, rebounded, closed near the high, some actual bullish U-turns where stocks were bought up quickly and actually closed back into yesterday's price action. It was good. But if you're a regular viewer of the channel, you know that we follow order flow, and order flow dictates the aggressive nature or passive nature with which we allocate position sizing to new trades. It was only one day. So what I mean by that is order flow over one day versus order flow over 2 days, over 2 weeks, over 2 months. It's a little bit tepid right now. We need to see follow through. Right now, the stock market and stock futures are actually opening lower. So buyers of stocks are not supporting that as of right now overnight. And there's a big reason for that. We mentioned that in the visual and the start and the title of this video today, which is inflation fears. Yesterday, the FOMC, the Fed minutes came out yesterday, and the market actually traded as if it was a FOMC announcement, which can be very volatile. If you actually, ironically this week, Fed announcements and options expiration days are 2 days that I have in my trading game plan that I really scale back, because it's something that smart traders do, experienced traders, is over time, excuse me, you pay attention to which stocks you're making money in, what type of situations you're making money in, when is the best time for you personally to buy stocks, when is the best time that you buy stocks and don't make money, and you need to pay attention to that. So for me personally, it's FOMC afternoons and options expiration days. Over the years, which now is 21 years, I've had a difficult time on those particular situations. Yesterday felt like an FOMC afternoon, and I'm going to show you about that. So stick around, right back. We're going to cover all this and get a little bit more into inflation and how inflation affects the stock market. Okay, so if you're new to the channel, or if you've been here and haven't done it yet, give us a subscribe, and I'll give you updates. Click that alert button or a little alarm bell, and definitely smash the thumbs up if you find this kind of video content helpful. Also, as well, let me know what kind of content you'd like to see. Click down below, and in the comment section, obviously leave a comment. Let me know what obstacles you have. Let me know what objectives you have for your stock trading, and we'll produce some more educational stuff along those lines. So we're going to head right on over to starting out like we do every day with sector rotation, and talking about how we're finding easier stocks to buy. That's really what it comes down to. And we start out, as we do every day here, with the sheet that we hand out to our private community every day. We break this down in a lot more detail, but you can see that something that's just screaming at you, which is why we start out with sector rotation every day. And I would actually recommend that you really learn how to do this. You can learn it from me. Click below to learn about the boot camp. But it's something you need to be on top of, whether it's classic technical analysis or whether it's classic fundamental analysis. It doesn't really matter. You want to find the leading stocks in the leading sectors, and that's where the smart money is investing. That's why they are the leading sectors. But you also need to pay attention to when that tide turns. And if you're a regular viewer of the channel, you know we do this every day. So I'm helping you be on top of the change, inflationary changes in the stock market, interest rate changes in the stock market, technology changes in the stock market, and how that affects which stocks to buy. Basic material and energy stocks were at the top of this list for a few weeks, if not about 2 months. And you can see now that they've made their way all the way to the bottom of the list. And this is sorted by over the last week. Now, you can also see over here, they've been strong for the last month with kind of hints at what I was talking about, but they've made their way to the bottom where they're out of play right now. We're going to take a look at a couple of energy stocks specifically and basic materials. So what does that mean for you? It means for you that if you're a short-term trader, it doesn't matter if you're day trading to buy stocks or swing trading to buy stocks, you still need to be following the smart money. You still need to be following the order flow. Now, what's interesting is financial stocks have been kind of hanging in this month specifically, even with all of the inflation talk, all of the inflation fears that are hovering over the stock market right now. And it's good reason, interest rates, right? Real estate, if you think about why is real estate popping up, real estate is considered by many a hedge against inflation as an alternative way to make money if stocks are not producing that same return, especially the return that they've produced over the last, let's say, 16 months. Technology stocks being affected by inflation, they just happen to have a good day. Yesterday was more of a rebound, and the week is kind of catching up. And the size of the list of stocks in technology is not there. And you can see here, we've actually been commenting on that. Technology was actually near the bottom of this list. It made its way just based on this week's performance. So what does that mean? We're actually going to start to talk a little bit now, just briefly, about what the market did yesterday. You can clearly see that the market actually gave us what we call a key reversal, not quite a bullish U-turn. A bullish U-turn would have needed to trade back into the previous day's range. And we actually said this yesterday. Now, you need to do this as a trader. It's very important if you plan to buy stocks, be profitable buying stocks, and do it over and over and over again. You need to know how much smart money has allocated to your idea. You need to build an argument for the idea. Is it one day after a 6-week downtrend? That's a start. Maybe you want to take a nibble. Jesse Livermore, in Reminiscences of a Stock Operator, called it a probe. He put out his first probe piece. Are you buying after your stock was well bid, higher highs, higher lows, and the previous 2 weeks saw buying? Well, I got a little bit more conviction there. Then you could size up a little bit. The market was only maybe 1 or 2 days away from all-time highs just 2 days ago, heading into this week, 3 days ago, and we could have actually rallied and everything would have been great. However, the market now is forming what is known as a 1-2-3 top, which is a potential reversal pattern to the downside. So with all of these inflationary fears hovering over the market right now, we're kind of not as clear. It's not well bid 2 days in a row and closing near the highs with higher highs and higher lows. It's not well bid on the weekly chart where you have higher highs and higher lows and closing on the highs. And the weekly charts are a little bit what we call more melted candlesticks, where you're opening, trading, and then at the end of the month, you basically open and close at the same place. Those are called melted candles. There's indecisions. A lot of buying happened over that 20 to 22-day period, and it opened and basically closed at the same spot. So what does that mean for you as a trader right now? You got to keep watching our videos every day, and you go back and we'll tell you which stocks, which sectors are the ones to pay attention to, the ones where smart money is flowing into, the ones where smart money is flowing out of. And that's a big thing to pay attention to. We all know we've been watching Tesla stock. Tesla has had some news. Elon Musk talking about Bitcoin, talking about their investment in Bitcoin, talking about the cost of mining Bitcoin. And that's affected not only Bitcoin, but Tesla itself. He kind of became the quasi face to validate it, and especially what they did with saying they're accepting it, right? Which also now affects PayPal. It affects Square and all of those other stocks that also affected that. Now, are you investing in Bitcoin? Are you trading Bitcoin? Are you day trading Bitcoin? You need to know your objectives. We had a lot of conversations this week with traders about, should I get out on the rally that we had last Thursday and Friday, and the rally in a couple of stocks like Triple D, DDD, and the stocks that we've had recently. You need to know your objective going into the trade so you can script how you plan to manage it. And that includes your stop loss. That includes your allocation of capital. That includes your initial profit target and what you plan to do once it rallies up to that initial profit target. So we're going to head over to the charts right now. We're going to take a look at the SPY. We're going to talk about what that means as far as reversing. But first, we're going to give you a couple of links that you can pay attention to and take a look at for how inflation affects the stock market. So we're going to head right on over. And the first one we're going to take a look at is, why did the stock market fall? And as I mentioned yesterday, we talked about the Fed might taper soon. So what exactly did that do to the stock market? If we mosey our way over, this is where it came out at 2 o'clock. We sold off, we rallied, we sold off, we rallied, we sold off, and then closed near the high. It looked like the day was great, but that was pretty much as much indecision as you could possibly get. And if we zoom over into the hourly candlesticks to see what that looked like at the end of the day, you can see here. Remember what I just said about indecision? Opening, closing, trading all up and down, and opening and closing at the same spot. Indecision, 1 hour of indecision, another hour of indecision, and then 30 minutes of buying at the end of the day. Next, Bitcoin taking a hit. Inflation worries hit the market. Inflation is hovering over the stock market right now. And whether you love Bitcoin or not, and I'm just going to come right out and say this, whether you're a Bitcoin fanatic, which I know a lot of people who are, or whether you have never and don't care about investing in Bitcoin or trading Bitcoin, it's here. It's here. It's being legitimized. The conversations now that Elon Musk spurred the other day is how expensive it is to actually mine for Bitcoin. What does Bitcoin mining mean? I don't know. Maybe you do. Leave a comment below. It's mysterious to me. I haven't invested $1 in Bitcoin yet. I am an equity trader, stock trading pro. We like to trade stocks, but I will tell you this. I've been around long enough to know the market is going to change. If there's any guarantee you will have in the market is that there will be change and we will adapt. I remember we went through the same thing when fractions became decimals. You had to adapt. We thought that nothing was going to move and the volatility was gone because it wasn't going from 1/16 to 3/8 and all that. We adapted and we changed. Same thing happened when the New York Stock Exchange went from using fully man-powered specialists, and they were working all the orders, both the men and women on the floor of the New York Stock Exchange and the electronic version of that, the NASDAQ. And we thought once things became the hybrid execution, and it was a lot more, we're like, oh, we're never gonna be able to keep up with the algorithms. Well, we are. We're keeping up with the algorithms. So don't fear. Have faith that together we will work our way through it. And that brings up another good point, too. We have a lot of members of the boot camp who are trading for the first time. And if that might be you, click down and learn about the boot camp. It's $295 for 30 days. You get access to everything, including 12 coaching calls and my entire course and all of my entries and exits. $295. Most people risk that on one trade. You get 30 days of everything. The point I want to bring up here is people, inflation, stock market, are we going down? If this starts to unfold. Remember, if this, then this, if this, then this, that's what makes you a good trader. If it unfolds, we will find the hot pockets of opportunity. We will find the hot sectors and then dig deeper into the industry groups. That's what makes somebody an experienced trader because you've been around long enough to see these different cycles and you understand your position sizing might change. The stocks you normally trade might change. The amount of time you hold those trades might change. But that's what great traders do. They adapt. Same with any other entrepreneur on the planet. You're opening a business. You have to pay attention to what's going on, and you do what you have to bring in revenue and minimize costs. And that's really what we're good at. That's why we focus and specialize on buying stocks. So we'll head on over here. That whole thing came out of Bitcoin. Bitcoin's not going anywhere. Crypto's not going anywhere. It's been legitimized. We all have to accept it and accept the fact that Bitcoin is moving the stock market. Bitcoin crashing is crashing the stock market. It's incredible. It's incredibly exciting because now this extra volatility is giving us opportunities to trade. And yesterday was actually a pretty good day to trade. I know a lot of people didn't trade yesterday. We found some good opportunities as a community in the boot camp. So just be aware of that too. So again, inflation in conversations in crypto. And what I'm going to do is I'm going to leave this article below. I'm going to post this article below this video. This is a really, really good article. It gets into a lot of details about what you need to know, and more specifically, this. How does higher inflation mean for stocks? What does it mean for stocks? So I'm going to leave that below the video. We're going to get into a few stocks right now. So that's actually how all of that's unfolding right now. The SPY actually came back at a big level. We talked about Tesla stock yesterday and over the weekend. This is really the big level. Tesla hitting the 200 period moving average. It is widely known as that big line in the sand where something changes from bullish market to bearish market or bearish to bullish, and we're still below that. If we creep and get back above that, that could be a good sign. But as of right now, we're below that. What's interesting about Tesla, though, is we keep closing lower, but we keep closing above the open, which means that smart money is controlling the close. So it'd be super interesting to see, based on the video we did a few days ago, will Tesla be making its way down to 400, or will the buyers be stepping back and say, no, not yet? This is the line in the sand to pay attention to, which ironically is going to end up being right around 600, which is the support. The 575 level really is the big level to pay attention to. So if you're going to write down a level to be watching Tesla today, 575 is the big level to keep an eye on. And ultimately, if it can get back above 600, that's constructive. If sellers come back in, it's not going to be pretty. It's not going to be pretty. So like we talked about in that video last week, make sure you have your stop losses in. All right, so as far as some other stocks we're going to be watching today, we actually mentioned the energy stocks have been taking a hit, but we're going to start out with basic material stocks, stocks that I really liked a couple of days ago. You can see Alcoa actually opening lower yesterday, gapping down, following through. You can see this longer-term trend line is still valid here, and we have the 50-period moving average. I am actually going to be looking to be a buyer of Alcoa on weakness today. X is another one that's actually sitting on a big support level, and you can see very clearly an indecision candlestick. So if X gets back above 25, I'm going to be looking at this one. Rio, which actually had some monster gaps, we were calling it the gap machine for a while there, both bullish and bearish. I don't like this one as much. I had a couple of private messages yesterday about Rio. I don't like it as much. Right now, I'm looking more at XAA, DB, and STLD. Those are going to be the four basic material stocks I'm going to be looking at. A couple of other stocks to be taking a look at are TJX, which actually got hammered. This is going to be a potential short sale, as well as PGR on the short sale. We did have a couple of retail stocks that traded very well yesterday too, though. Walmart actually caught a bid yesterday after the market opened significantly lower, and Target. And one last one, CVS, which we actually mentioned pre-market yesterday. So we have a few stocks today. It's a little bit of a pickier day. The stock futures are down today, so buyers are not stepping in and buying stocks overnight. So we actually cleaned up all of our open swing trades yesterday. We went flat looking for new opportunities today. Those are some of the stocks I'm going to be looking at today. Basic material stocks on weakness, even though they're at the bottom of that list, we have to respect the fact that order flow is still valid. So this is an opportunity to buy a strong sector over the last quarter on a pullback if buyers step back in. Now remember, please take everything I say within context. If this happens, then I plan to do this. If this happens, then I plan to do this. That's the difference between somebody who's a trader and a chart reader. A chart reader struggles because they're saying, well, it was supposed to happen because the stochastics moved up and the RSI moved up and the candle did that. No, that's chart reading. You're just analyzing what's going on. Traders make and plan decisions, and that's what will separate you from somebody who's a frustrated chart reader, because you're ready to act. So we outlined a few trades today, some that were strong, some that pulled back, and we gave if-then scenarios for both. That's what I'd love to be able to teach you over time as we work together. Have a great day, everybody, and I will speak to you soon. And again, please click down, give us a subscribe. If you haven't done so yet, you'll also click that alert button and smash the thumbs up button. That will let me know that you like that kind of content we're producing too. So have an awesome day. Be better than you ever expected you could be. Take care now.